Everyone. My name is Mike Higley with Proactive Accounting and Advisory Services. Today we're talking about pass-through entity tax payments for owners. Can your business pay your state and local tax? So a little bit of background, or first off, this is not intended to be tax advice. The following information is for informational purposes only. Please consult your tax advisor for your specific situation. Okay, a little bit of background. In 2018, the Tax Cuts and Jobs Act made a lot of changes to our tax code. Number one was the increase in the standard deduction. Now that for 2023 is $13,850 for single filers and $27,700 for married filers. It also limited the amount of state and local taxes that you can include as an itemized deduction. So for a lot of people that, high income individuals or people with high property tax, they might go over that $10,000 limit each year and not get a benefit for having paid those taxes each year. Again, those SALT or state and local tax payments are comprised of your property tax and either your sales tax or your state income tax. So you can see it'd be frustrating to pay those taxes that were previously deductible and are now not. So as a workaround, many states, for sure I know of Utah and California. Utah is where I file most of my tax returns, so that's what I'm the most familiar with. That's the one we're going to use as our example in most cases. But they passed legislation as kind of a workaround that allows a pass-through entity such as an 1120, an S corporation or a partnership, or an LLC that's taxed as a pass-through entity, to make an election to pay state and local taxes on behalf of the owners. Now, the reason this is beneficial is the business, the pass-through entity, gets to take a deduction for the tax payment on their federal income tax return. And then on the state side, you don't get that same deduction, but the owner gets to take a non-refundable credit for those payments that the pass-through entity made on your behalf. Now in Utah, if you pay too much, that credit carries forward for 5 years. It is non-refundable, meaning that you won't get it back if you overpay, but it gets used up first. And then if you have overpaid with like your W-2 withholding or some other tax payments, those can be refunded. Now, keep in mind that you should, if you're going to make a payment for one owner, you should make it for all of them, and it should be in same proportion as their ownership, right? So with the 50-50, that's easy. You should pay the same amount for each person. If there's a different ownership percentage, make sure that you're paying the same amount, or the prorated amount based on their ownership. Now, who can benefit from this tax change? Okay, number one, you have to be a pass-through entity owner. So that's a business that files either an 1120S tax return or a 1065. 1120S is for S corps. 1065 is generally partnerships. Multi-member LLCs default to a partnership. Now, if you're a single member LLC, if you file on a Schedule C, you do not qualify for this. You would have to have made that S corp election and file on 1120S in order to get this benefit. You have to owe state income tax, right? And then this is the key to who would benefit is you either will be paying more state and local tax than that $10,000 limit and itemizing your return, your deductions rather, or you would take the standard deduction. Now this is especially beneficial. We use deduction bunching a lot here, meaning if you could pay, for example, your charitable donations, you could pay 2 years in 1 year and pay none in the next, right? And so that moves all of your charitable donations forward to the first year, and the second year you take the standard deduction. So this would be a great benefit for that as well. If you're planning on, hey, I'm going to load up my deductions in 1 year, and then you want to be able to deduct your state and local tax at the personal level, And then the next year you're going to take the standard deduction. So then you want to have the business pay those state and local taxes. Okay, so those are the people who would generally benefit from something like this. Now, how would you make a state and local tax payment? For Utah, Utah's website to make this is tap.utah.gov. And when you open that up, it looks like this. So here's their taxpayer access point. Under this first section here, under returns, at the bottom, there's a button that says File SALT Report. That's where you would click on to start the process of making those payments and filing a report for this with the state saying that you did make them. So first you would, say, yes, I know that we're making an election on behalf of our pass-through entity. Are we fiscal year filers? So if you file calendar year, you click no. Period. For this period, you'd be paying this one by December 31st of this year. And so the period would be for December 31st of this year. And if you've not made any payments before, if you're not amending, you would just click next. Now it'll give you an option to upload a template. This would be if you have a lot of partners, right? Most small businesses would ignore that. So go ahead and click next. And then you'll include the name of your business, your EIN of the business, what type of structure your business is. Right? If it's a limited liability company, it will ask you, it used to ask how you file your return. But so this is the legal structure, and then, so corporation, sub-entity type, are you an S-Corp? Right? And it used to do that with limited liabilities. I don't know why it doesn't anymore. Your contact information, your mailing address, and then you'll go on to enter the information for each owner, each partner. Couple things to remember. So again, under that returns, you have to pay it through this method, not how you would normally make payments through TAP. Payments are due by December 31st of the current year. Again, skip the template, and then there's a section where you enter each individual owners, and it says it asks for the total amount of state tax and your Utah state tax. Again, your Utah cannot be more than your total, and so you want to make sure you enter that in correctly. Okay, well, I hope this has been helpful for you. If you have any questions as to whether or not, hey, do I qualify? Hey, is this a good benefit to me? Feel free to reach out to us. You can visit our website, aproactivecpa.com. You can give us a call at our office, 801-935-9860, or you can send us an email at info@aproactivecpa.com, and we'd be happy to kind of gather some information, help answer those questions. Thanks for watching. If you would like to receive additional notifications or see some of our other videos, go ahead and hit subscribe and like, and we'll see you next time.